Hello, all the CA Inter students. Now I am coming up with a super quick revision of the chapter content as well as the questions that will be tested with regard to the chapter Fema. So this is a very quick revision of charts wherein we need to do two things now. Number one, I will be completing the content and you need to refer the question bank and complete it. So that way parallelly you are going to do both the things and the perfection is absolutely guaranteed. So let's have a look into the chapter Fema. So name of the chapter Foreign Exchange Management Act. Let's have a super quick revision of the concept from the charts directly such that there is no wastage of time and unnecessary content we will avoid. Point number one. What is the preamble of this particular act? This is an act to consolidate and amend the law relating to foreign exchange. Okay. What is the objective of bringing this act? Facilitating external trade and payments. It's not objecting trade and payments. Facilitating trade and payments. And while facilitating that, our intention is to promote, not development, orderly development and maintenance of foreign exchange market in India. So 2 points you need to write if the question comes in exam. What is the objective of FEMA? Okay, number one, it is to consolidate and amend the law relating to foreign exchange. Number one. Number two, what is the main object? What are the two sub objectives? Facilitate external trade and payments. What is the number three? Orderly development and maintenance of forex market in India. So these are the objects. Next one. What is the name of the act? FEBA. Extend whole of India. It shall apply to all the branches, offices and agencies outside India owned and controlled by a person resident in India. It is not just applicable. FEMA is not just applicable for entities in India. It is applicable for OBA outside India but controlled from India. Means office, branch or an agency outside India owned or controlled by a person resident in India, that is also considered to be under the FEMA itself. Next, important definitions. Foreign exchange means foreign currency, but only foreign currency is foreign exchange. Yeah, no, it includes deposits, credits and balances payable in foreign currency. So simply to tell, foreign exchange means a foreign currency, but it does not restrict with that. Foreign exchange means a foreign currency, and along with that, it includes deposits, credits, and balances. DCB in foreign currency. D for deposit, C for credits, B for balances payable. This is not content explanation session. This is a revision. I'm not going to tell any logic and waste your time. Just remember deposits, credits, and balances payable in foreign currency. Next one. Drafts, travelers checks, letters of credit, bills of exchange. Expressed or drawn in Indian currency but payable in foreign currency. Expressed or drawn in foreign currency but payable in Indian currency. Means what? Drafts, travelers checks, letters of credit, bills of exchange. Expressed or drawn, payable. Expressed or drawn in Indian currency but payable in foreign currency, or expressed or drawn in foreign currency, payable in Indian currency. Okay, so this also will be treated as foreign exchange only, even though Indian currency is involved. Somewhere foreign currency should be involved. That's it. Okay, just because of the reason that Indian currency is involved, it will not be treated as an Indian currency. It is still treated as a foreign exchange only. So drafts, travelers checks, letters of credit, bills of exchange, expressed or drawn in Indian currency, but payment is made in foreign currency. Expressed or drawn in foreign currency, but payable in Indian currency. Foreign currency is involved. Yes, sir. That's it. That draft, travelers checks, letter of credit, bills of exchange will be treated as a foreign exchange only. So consolidate. What is a foreign exchange? Foreign exchange means foreign currency and includes deposits, credits, balances payable in foreign currency. Drafts, travelers checks, letters of credit, bills of exchange expressed or drawn in Indian currency, payable in foreign currency. Expressed or drawn in foreign currency, payable in Indian currency. Everything will be treated as foreign exchange. Next, foreign currency. Anything other than Indian currency. Indian currency means any currency which is expressed in INR. Okay. Next, currency. Currency includes the following list: currency notes, postal orders, money orders, the list, drafts, traveler checks, letters of credit, bills of exchange, credit cards. All these will be included into the definition of currency. Next, residential status. Very, very important concept. What is this? Residential status. First thing, there are three definitions. person, person resident in India, person resident outside India. Okay, person resident in India, person resident outside India. First, let us see the definition of person. Person includes same as Income Tax Act, but add also office, branch, or agency. That's it. So, person includes individual, HUF, company, firm, AOP, BOI, AJP. Office, branches, or agencies. Those are also included. That's it. Next, person resident in India, person resident outside India. What is a person resident outside India? Means a person who is not a resident in India. So, anything other than PRI automatically qualifies as a PROI. Next, person resident in India. See, this is the definition. Pause the video and then see this. So, let's see the definition of person resident in India. See, person resident in India is divided into two parts for the individuals, other than individuals. First, let us see other than individuals. A person or a body corporate will be treated as a person resident in India if it is registered or incorporated in India. So, companies, LLPs, or AOPs or societies which are registered in India, automatically they qualify as PRI. Next, sir, I am not a person or a body corporate registered or incorporated, I am just a branch, or I am just an agency, or I am just a head office or a branch office. Then what is my position? They said like this. Are you an office, branch, or an agency? Yes. Okay, where you are located? In India. That's it. You are a PRI, irrespective of it is owned or controlled by PROI. Next, you are owned or controlled by PROI? Yeah? Yes, sir. Then irrespective of it is outside India, it will become a PRI. Okay, so an office, branch, or an agency in India owned or controlled by person resident outside India will be a PRI, though the ownership and control outside India, though it is outside India, in spite of that fact, it will be PRI because establishment is in India. Second case, establishment may be outside India, but control is within India, na? Then also it will be treated as a resident only. Okay, this is for other than individuals. So any person or a body corporate registered or incorporated in India, or any office, branch, or an agency owned in India owned or controlled by PROI, outside India owned or controlled by PRI, will be treated as a PRI. Next one, person resident within India. For individuals, for whom? Individuals. Okay, for individuals resident in India means, first condition that we need to satisfy is the person should reside in India for more than 182 days during the course of preceding financial year. Means in the preceding financial year, that person, individual, must reside in India for more than 182. It's not 180, it is 182. It's not more than or equal to, it is more than. It's not less than, it is more than. So, a person residing in India for more than 182 days during the course of preceding financial year. Sir, I stayed for more than 182 days in the preceding financial year. Please treat me as a PRI. No. This is preceding financial year condition. Next, it does not include. What is the meaning of does not include? Even though you satisfy this condition, you are not included into the definition of PRI if you are a person who has gone out of India for these three reasons. Okay, who has come to India for these three, other than these three reasons. Read it properly, what I said. I repeat, are you an individual? You stayed in India for more than 182 days in the last year? This year, have you either gone out of India or coming to India? If you are going out, okay, if you are going out, you are not included into the definition of PRI if you gone out for these three reasons. Okay, you are coming to India other than for these three reasons. These three reasons are same across both the cases. What are the three reasons? Reasons which attach some permanency. Okay, employment, business or vocation, not vacation, vocation. Okay, any other life learning skill is a vocation. So employment, business or vocation. Next, stay intended for uncertain period. Okay, so stay intended for uncertain period. Okay, these three cases, okay, these three cases will be treated as the cases which attaches permanency. For example, I go for employment to USA. My permanency will be more in USA now. I came to India for employment. My permanency is more in India now. I went for business in USA. Okay, my business I am establishing there. Now, what will happen if I establish a business outside India? My permanency is more outside India now. Okay, vocation also same. And I went outside India. I went outside India. Okay, going out is certain. When you will be coming back to India, that I am uncertain, he said. Okay, that's called as stay intended for uncertain period. Okay, wow. So listen carefully. Are you an individual? Yes, sir. I'm an individual. You are not included into the definition of PRI if you have gone out of India in the current financial year, for employment outside India, for business or vocation outside India. Okay. Next, for any other purpose can be anything. It may not be employment or business, but intention to stay outside India is for uncertain period. Means going out is certain. How many days you will stay there? I don't know. I will stay for as long as I wanted to stay. And what is not certain? Coming back to India is not certain. Okay, coming back to India is not certain. Therefore, you are not included into the definition of PRI. So, who is a PRI? PRI means, see here, you should reside in India in the last financial year for more than 182 days. Not just that. And you should not fall under any of these two exclusions. What is the first exclusion? Gone out of India for three purposes. What is the second condition? Coming into India for three purposes. Coming into India for three purposes. Okay, I'm very sorry. Coming into India other than for three purposes. What are the other than three? Employment to business or occasion and indefinite period of stay. You are coming to India other than. If you come to India for employment, attachment of permanency is in India, you are a PRI. You are coming to India for a marriage occasion. You wanted to visit the marriage and you wanted to leave. Marriage is not coming under employment, business, vocation, indefinite. Nothing is there. So you are coming to India for 30 days and leaving. Now your stay is certain. 30 days you will stay. After that you will leave. So it does not come under indefinite certain period. It will not come under business. It won't come under vocation. It won't come under employment. That means you are coming to India not for the three purposes. That means permanency is less in India. Therefore, in that case, you are not treated as a PRI. That's why if you are going out, you should go out for the three purposes to call yourself as a PROI. To call yourself as a PROI. You are not a PRI. Okay, you are coming to India. Why you are coming? Not for these three purposes. Then also you are not a PRI. Even though you stayed for more than 182 days in the preceding financial year. However, in this connection, CA Institute is giving some contradictory answers in its question banks. I mean, in the suggested answers, etc. For example, I stayed in India for more than 180 days in the last year. Okay, 180 days in the last year. Last year I stayed in India. I went out. Okay, I went out. I stayed in India for more than one. First condition satisfied. Okay, next, this year, I am going out of India. I am going out of India. This year, if you are going out of India, I will ask why you are going. On the date of exit, you will tell that I am leaving India for employment. Then I will tell, okay, employment means permanency is attached outside India. You are called as a PROI, though you stayed for more than 180 days in the last year. Okay, wow. Second, you stayed in India in the last year. You stayed in India in the last year only for 120 days. Only for 120 days. Now this year you are going out of India. You are going out of India. Why you are going? You are going for vacation. Okay. Means you will come back anyway very soon. Now who are you? You are a PROI because you stayed only for 120. But say CA suggested answers like ICA is writing that even in that case, first condition you should not see, second condition only, then why first condition is there? So exam question if it comes na, first condition you can write, but answers in the suggested answers, what they are telling is, even though you do not satisfy the first condition, if you satisfy second condition, it is enough to call yourself as a PRI. I will show one question bank answer also, then you can understand in what circumstances how to react. Okay, finally at the end of Fema chapter I will show that, but overall concept everyone understood. Next one. See here. Dealing in foreign exchange. Except with the approval of RBI, no person shall deal or transfer any foreign exchange or foreign security to any person not being an authorized person. Means without intervention of authorized person, directly you should not do transaction in foreign exchange. Okay, next. No person shall make payment, okay, to a PROI, shall receive payment from a PROI otherwise than through authorized person. Means what? Without intervention of authorized person, you should not pay anyone, you should not receive from anyone. Foreign exchange. Next, enter into any financial transaction for acquisition or transfer of asset outside India. Means what? Only as per the provisions of this law, you have to acquire assets outside India, you have to transfer assets outside India. Okay, that's why what they said, except with the approval of RBI. Means I'm not telling that you cannot do this. You wanted to enter into any financial transaction for acquisition of any property outside India, na? Yes, sir. Follow the conditions of Fema and then you do. Normally not possible. Next, holding of foreign exchange. No PRI shall acquire, hold, own, possess or transfer foreign exchange, foreign security or foreign immovable property except in the manner provided in this act. Means what? I cannot acquire foreign exchange, foreign security or foreign immovable property. I cannot own, I cannot possess, I cannot transfer unless you do it in the manner provided in this act. Means you have to do anything. I want to do small thing or big thing with foreign exchange. Comply with this act and go ahead. Means what? Without complying with this act, nothing is permitted, nothing is possible. Next. Next one. Transactions in Fema. Let's make a super fast revision from now. Listen carefully. So let us begin. Transactions under Fema. There are two types of transactions, which is capital account and second one will be current account. Okay. So first thing, let us understand the nature of both. All capital account transactions are strictly prohibited unless permitted. All current account transactions are permitted unless prohibited. From this, what you have to understand? List of permitted will be given here. Anything not in the permitted, it is prohibited. Here, list of prohibition will be given. Anything other than prohibition is permitted. So like that you need to understand. So there are three kinds of capital account transaction. Permissible with approval, freely permissible even without restriction, strictly prohibited. Strictly prohibited. Okay. Now let us understand the idea behind. Some transactions are permissible, but with approval. With whose approval? RBI, CG. Debt instruments are involved, RBI. Non-debt instrument, not involving debt instruments, CG. Means for example, shares, etc. CG. FDI, CG. Okay. So if there is ECB, borrowing is involved, RBI. Okay. Any debentures are involved, RBI. Bonds are involved, RBI. So RBI will be involving if there is a debt instrument. If there is a non-debt instrument, CG. Sir, it's not debt, it's not non-debt, sir. It is a general transaction. Then also RBI. Then also RBI. For example, I want to purchase immovable property. Immovable property is neither a debt instrument, neither non-debt instrument. It's not an instrument at all. Then RBI permission only required. Okay. So, class of now listen carefully. What I said, capital account transaction means, okay, all transactions are strictly prohibited, which are unless prohibited. Means what? I will tell clearly these are permitted, only those are permitted. So who will tell these are permitted? That's why, see here, both RBI and central government, depending on the type of instrument, will define what transactions are allowed, class of transactions. Okay, they will tell, these are allowed, means those are permitted, those only you can do. Okay, they will not just give the class of transaction, class means list, they will also tell the limits. Means every transaction you cannot do dollars 1 million, 1 billion, 10 billion, 1000 billion, like that you cannot do. Limits also are there. For inter-level limits they won't ask because it's not there in your syllabus. Just remember that CG and RBI, they will give three things. Number one, list of transactions that are allowed. Second, limits on the transaction. And third one, other conditions will be given. That's it. Next one. So, permissible with approval we understood. Freely permissible without restrictions we will discuss. Let us go to the third one first. Strictly prohibited. What are strictly prohibited? Any capital account transaction, listen to my words, any capital account transaction that is not falling under permissible with approval, that is not falling under freely permissible automatically will fall under strictly prohibited. That's why all capital account transactions are strictly prohibited unless permitted. So strictly prohibited again two types. Number one, express prohibition. Number two, implied prohibition. What do you mean express? For PROI, along with these two, certain additional prohibitions are also given. We will read that. Next, implied. Category 1 capital account transaction means not covered by specified class or crossing the limit or conditions not satisfied. It will be strictly prohibited. Okay. First, let us discuss about capital account transaction. Okay. What is a capital account transaction? I'm not defining it. Definition we will read later. All capital account transactions are prohibited unless permitted. Unless permitted. Okay. So unless permitted. There are two permissions. Permissible with approval, freely permissible without any approval. Okay. Permissible with approval. Now, whose approval? Debt instruments RBI, general transaction RBI, non-debt instruments CG. Okay. They will just tell these are allowed, these are not allowed. No. They will tell three things. List given, limits given, other conditions given, both the sides. Next. Strictly prohibited. Some are freely permitted. We will see what are the freely permitted. Next. Strictly prohibited. PROI some express prohibitions are given. Along with that, for PROI and PRI, anything that does not come under this and this will automatically fall under strictly prohibited. Okay, va? Next. Capital account transaction. Definition. Define a capital account transaction. Capital account transaction means a transaction which alters assets or liabilities outside India for a PRI. Assets or liability in India for a PROI. That's it. Including transaction referred to in section 6.3, not there. 6.3 is deleted now. So you need not get, section it is there, but list is not there now. So just read and leave. Main point is you have to read up to here. So tell me, what is a capital account transaction? Capital account transaction means a transaction which alters assets or liability outside India for a PRI. Assets or liability in India for a PROI. Repeat. Assets or liabilities outside India for a PRI. Assets or liabilities outside India in India for a PROI. Okay. So what is a capital account transaction? It's a transaction that alters assets liabilities outside India for PRI, in India for PROI. If a PRI purchases house outside India, it's a capital account because house outside India is there. If we take loan outside India, okay, but purchase of asset out, then also it is a capital account transaction for him because liability is created outside India. I am purchasing house outside India with a loan taken outside India. Both sides, assets and liability, it will become a capital account transaction. Okay, next issue. So, this is not the time to learn and think about the logic of the law. This is not that all we will do in normal. Now, this is super fast revision, such that you can start doing the questions given in exam. Next, what are the contents in section 6? Compulsory medium of AP. Authorized person means without the medium of authorized person, you cannot do any capital account transaction. Any person may, means RPRI or PROI may sell foreign exchange or draw foreign exchange. What do you mean sell foreign exchange? Giving foreign exchange. Draw means taking foreign exchange. You should do it only to sell to authorized person, buy from authorized person for any capital account transaction. So, if you want to do any capital account transaction, you require money. You should either sell to authorized person or buy from authorized person. Next, powers of RBI. RBI in consultation with CG may specify any capital account transaction involving debt instruments which are permissible. Limit to conditions. Okay. Any involving debt instruments which are non-debt instruments. Sorry. Okay. Non-debt instruments which are permissible. Limit and other conditions. This already we read there itself. Next. Next one. See here. Special provisions for PRI and PROI with respect to pre-owned or inherited properties. Sir, what is a pre-owned or inherited properties? See, I am a PRI. When I was a PRI, I purchased a house in India. Later, I became a PROI. Now, for PROI, this become Indian property. But capital account transaction concept don't get attracted because those are purchased when I was a PRI. Those are purchased when Fema is not attracted to me. So once Fema is not attracted, throughout the transaction, Fema will not touch you because original Fema is not there. More logics, don't ask, this is not a time to learn. This is a time to revise and write exam and pass. Okay. So for a PRI may hold, own, transfer or invest in foreign currency, foreign security or foreign immovable property if those are acquired or owned by such person when he was a PROI or inherited from a PROI. Means what? I am a PRI. Okay, I wanted to hold a foreign currency or foreign security or foreign immovable property. Okay. Okay. If those are acquired or held by such person when he was a PROI. When he was a PROI means what? My point is, this fellow is holding a foreign currency, foreign security, foreign immovable property. Very good. Okay, when you acquired the foreign immovable property, foreign asset, etc., when I was a PROI, or I did not acquire, I am a PROI, I am a PRI, from PROI outside India, I was inherited with that. Okay, inherited with that. Then also FEMA won't get attracted. You can hold it, you can transfer it, you can do whatever you want with it. For PROI, exactly reverse. A PROI may hold Indian currency, security, and immovable property. He can own, he can transfer, he can invest. If those are acquired by such person when he is a PROI or inherited from a PRI, when he is a PRI or inherited from a PRI. Okay. See, what does it mean? Mainly why this concept came. NRIs returning to India. I stayed in USA for 10 years. Say for example, I have huge bank balance in dollars. I am coming to India now. I am coming to India. Now when you come to India, FEMA should not tell, take permission from RBI because you are holding a foreign bank accounts. So in that dollars are there. So that will come under foreign currency. My dollars in my dollar account is a foreign currency. Okay, but you became a PRI na? Okay, but you became PRI. Now because you become a PRI, for an Indian person, foreign deposits are there. Actually, it is a foreign exchange. You need to take FEMA approval, but not required because those accounts are coming to you not from India. When you were outside India, or there is Mr. A. A grandfather is in India. A grandfather is in India. A is in USA. Okay. In the name of A, he inherited property through a inheritance deed. That's it. This fellow will become the owner, but he is staying outside India. For an outside India person, for a PROI, there is an asset that is created within India, but it does not attract FEMA because it's an inheritance, it's a gift type. There is no outflow of foreign exchange to attract FEMA on that. Same applicable for PRA, reverse. Next. Even if you want to establish any branch office or etc., PROI wanted to establish that, then also RBI has a power to regulate it. Okay, that's it. These are all some important things. Next one, connected regulations. There we read na prohibited capital account transaction, like express prohibitions are there for PROI. What are those? PROI is prohibited from making investment in India in any company, partnership firm or any entity. Who is prohibited? PROI. Prohibited from what? Investing. Where? In any entity. That entity can be company or partnership firm or any entity. Okay, where it is located? Within India. So PROI prohibited to invest within India in any entity. That entity is engaged in chit fund, nidhi, agriculture or plantation, real estate or farmhouses, TDRs, transferable development rights. Joint development agreements will be there for land. Again, I am telling, this is not the time to learn. This is a time to fast revision. So, which entities are engaged? If that entity is engaged in business of chit fund or nidhi or agriculture or plantation or real estate farmhouses or transferable development right, like if that particular entity is involved, then such a kind of PROI, okay, is prohibited from making any investment. Okay, so normally PROI can invest, but in nidhi company, chit fund company or real estate farmhouses etc., in those companies you cannot invest. Okay, next, freely permissible capital account. There are two freely permitted capital account transaction. Without any permission you can do. Example, a lot many times they are tested. Amortization of loan, depreciation on direct investment. Normal class half an hour I will explain each, but this is not the time to learn them. This is a time to relive the position what we already know. So amortization of loan, depreciation on direct investment. These two are freely permissible. Next, prior approval of RBI. See, this part is extremely important. Listen carefully to the point. Okay, well, see here. Schedule 1 is applicable for PRI. 2 is applicable for PROI. Okay, what are these two transactions? From this only exam questions are coming. These are the list of, there we read na, RBI will give the list of transactions permitted, limit on amount, okay, other conditions, list la ide list. Okay, let us see what is the list. For a PRI, these are permitted. Other than this, anything is prohibited. Okay, but that should not be amortization of loan or depreciation of director, because it's a freely permissible. So investment by a person resident in India in foreign security. Investment by a person resident in India in foreign security. So Indian resident investing in foreign security. Foreign currency loans. Foreign currency loans. Transfer of immovable property outside India by a person resident in India. By a person resident in India. Sir, only transfer, sir. Transfer here does not mean sale. No, not that. Transfer you are making or they are making to you. It includes both purchase as well as sale. Whenever you wanted to buy or sell any immovable property outside India by a PRI, it attracts capital account. You can do that. Next, guarantees issued by PRI in favor of PROI. PROI outside India taking loan from a bank outside India. PRI is giving guarantee for that. It's a contingent liability included into the definition of capital account transaction. Export and import of foreign currency notes means I will give rupees, you give me dollars. We don't have any purchase sale. Just I will give you I will give you 100 rupee note. You will give me 10 rupee notes. What transaction we are doing? We are only doing import and export of currencies now. Same thing. Next one. Loans and overdrafts made by person resident in India from a person resident outside India. See here, maintenance of foreign currency accounts in India and outside India by a PRI. Okay, foreign currency accounts I am maintaining within India. For example, I came to India from USA. I am having dollar NRE account. Dollar NRE account. In that case, what will happen? This is a dollar account, NRE. That's a foreign currency account maintained in India. I am a PRI. I am having a dollar account in USA also. That is a foreign currency account. Okay, maintained outside India. Maintained outside India by a PRI. Insurance policy by a person in India from an insurance company outside India. Okay, remember this. They can ask a question. Taking an insurance policy outside India, is it allowed? Yes, it is allowed. Next one. Loans and overdraft by a PRI to a PROI. Okay, see here I am giving loan. There I am taking loan, previous point. Remittance outside India of capital assets of a person resident in India. Okay, of a capital assets of a person resident in India. Means for a capital asset outside India, I am making the payment. That will also be taken. Derivative contracts is also a capital account transaction. Same like that, they have given the list of transactions also for PROI. Just you need to remember this list. Okay, same. Whatever list you have seen on the left side, some numbers or some points inside that also will be there here. Okay, so don't miss the concept. Just read this list, because in this list 99% you will find whatever you have already read in the previous part. Okay, next. So now we completed capital account transactions. So capital account transactions are of three types. Capital account transactions which are permitted with approval of RBI or CG. These are the list. This list you need to keep in mind. Okay. Next. Okay. Next. Capital account transactions which are strictly prohibited, and capital account transactions which are permitted freely. Freely permitted only two: amortization of loan, depreciation on direct investment. Prohibited all other than freely permitted and permitted with RBI. This list, other than these two lists, other than freely permitted two transaction, amortization and depreciation, all others are prohibited. But for a PROI, extra prohibitions are also there. A PROI cannot make investment in any entity in India, company, anything that is engaged in chit fund, nidhi, real estate, okay, construction of farmhouses, plantations, okay, along with the trading in TDRs. All these like should not be involved. It is a prohibition only for PROI. Next one, current account transaction. What is the current account transaction? Any transaction other than capital account transaction automatically qualifies as a current account transaction. Current account transaction means any transaction other than capital account. But give some examples. Then they have given a list of examples. What are those? Payments in connection with foreign trade. Means import is made. I am making payment. Current account. Other current business and services. Other current business and services. Any kind of business you are doing, trade you are doing, services you are providing. Everything will come under, because they are attached, they are reflected in the P&L account. They are not on the balance sheet assets and liability. Alteration of asset liability creates capital account. These are all current businesses, etc. But loan is a capital account, correct? But short-term loan is not a capital account. It's a current account only. Okay, short-term will be treated as current. Though by nature it is a capital account, it is coming under current account only. Next, these are all trade related. Tell me, what are the trade related? Payments in connection with the foreign trade. Second, other current business and services, including what? Short-term banking. Next, finance related. That's why, remember, loan taken for more than 1 year, long term, capital account. Within 1 year, short term, current account. Finance related. See, loan is a capital account. Interest on loan is a current account. Investment is a capital account. Income from investment is a current account. Personal expenses, any personal expenses that you put, okay? Any personal expenses. Remittances for living expenses, etc. Okay, so remittances for living expenses of parents, spouse, children residing abroad, any kind of living expenses, personal expenses, etc. Foreign travel, education, medical care, anything, personal expenses will come under current account transaction. This is the definition. Okay, so next, what are the types of current account transaction? There are 3 types of current account transaction, as you see on the screen. Okay, as you see on the screen, there are 3 types of current account transactions. Number 1, strictly prohibited current account transaction. Number 2, prior CG approval transactions. Number 3, RBI approval transaction. Tell me, what are the 3? Strictly prohibited, CG approval, and RBI approval. Strictly prohibited. These all are strictly prohibited transaction. Transaction is not prohibited. Drawing foreign exchange for these transactions are prohibited. And this is the super quick revision. In no way I'm going to explain what is the transaction. I don't want to waste time. Remittances out of income from lottery winnings. India lottery winnings came. That amount you wanted to convert into foreign exchange. Prohibited. Next. Same thing. You got income from lottery in a second case. You got income from racing, riding, etc. That you wanted to use for remittances. Not allowed. Next one. This time reverse. You got income properly in India, but you wanted to pay outside India for lottery ticket purchases, banned magazines, etc. Not allowed. Next one. Very, very important things are this one. They will ask question also. This and this. Okay, na? See here. There is an Indian company. Very good. That Indian company is having a wholly owned subsidiary. Very good. That is in abroad. Okay. In that, what will be wholly owned subsidiary? Equity investment in that particular company will be made by Indian company. Wholly owned subsidiary means what? Wholly owned subsidiary is nothing but my mirror image. When your mirror image is available outside India, then why you are paying them in dollars, euros, etc.? Therefore, if you want to pay any commission on exports made towards equity investment in joint ventures or wholly owned subsidiary abroad of Indian company, drawal of foreign exchange is prohibited. Simply, there is a company called as X Limited in India. That company is having Y Incorporated as a wholly owned subsidiary in USA. Okay. On behalf of X Limited, this Y Limited will sell goods to USA persons. For that, X Limited in India will pay commission to them. That commission you can pay in rupee directly because it is nothing but your own company. Next, payments made when dividend balancing is applicable. Dividend balancing is applicable in a case. Dividend balancing is applicable in a case. In such case where dividend balancing is applicable, payment made in foreign exchange is not allowed. Not allowed. Okay. Dividend balancing, what will happen is set off will be happening. Means what? Amount of exports you make, amount of dividend paid by that company will be set off. So any question that comes in exam relating to export and dividend, it's a dividend balancing question. Okay. So forget about all other concepts. If question comes in that way, forget about everything. Remember, that's a dividend balancing question. Drawal of foreign exchange is prohibited. Next one. Export commission under RSC route. Rupee state credit route. It is between India, Russia, India and Japan, like that. With 17 countries, India is having a rupee state credit agreement. Means what? With those countries, if you do any business with any person in that country, if you do any business and you want to pay commission to him, that commission you can pay directly in rupee, because we have agreement with that country to pay directly in rupee. At that time, drawing foreign exchange is prohibited. Next, payment for callback services. So any callback service, remember, they will ask directly, callback service ki drawing foreign exchange prohibited. interest on non-resident special rupee scheme account. NRSRS means what? Non-resident special rupee scheme account. For that, if you want to pay any interest, not allowed because it's a current account. Next one, travel to Nepal, Bhutan. They are accepting rupee. Don't draw foreign exchange. Prohibited. Next one, payment to a person resident in Nepal, Bhutan. Same logic. Prohibited. Next one, CG approval cases. Means in these cases, prior approval of central government is required. Number one, cultural tours. Number two, payment of import by ocean transit. First one is what tour? Cultural tours. Foreign travel is different, business travel is different, cultural tours are different. Okay, I want to conduct a star night, I wanted to conduct an audio function, pre-release functions outside India. Okay, see for example, Talapati Vijay wanted to have his last and final farewell movie to be released in India, and he wanted to do that function in Malaysia. For that, he wanted to draw foreign exchange, that particular producer team. For them, this section only will get attracted. It's a cultural tour. CG approval is required. Next one, payment of import by ocean transit. Payment of any kind of ocean transit related things will come under CG. Import payment, whenever you made any import, there are 4 payments you need to make. Import payment, freight payment, container detention charges. Container has to come out in ocean transit. Okay. Next one, P&I club membership. P&I club is like a insurance company, but normal insurance company will cover only the goods. This will cover entire risk of ship as well. Okay, that's why any kind of membership fee for P&I club, if you pay, that will also come under current account transaction only. Okay, so tell me, what are the things? Cultural tours, number one. Import by ocean transit, import payment, freight payment, container detention charges, P&I membership payment. Next, I wanted to transport my goods from one place to another country. Okay, in India, it is in Hyderabad. Hyderabad has no ocean. Correct? On land, it will go till Chennai. Okay, on land, it will go till Chennai. From Chennai, it will go by ship. It will go to London. London, again, it will be broken into parts. Okay, and again, ship, again in any bus or something like that, they will take. Now, I am using multimodal transport. Okay, India, multimodal transports are there. Means what? They will be having agents outside India. Okay, within India, they are having land transport, air transport, as well as ocean transport. Example, DHL. There is a company called as DHL. Lorries are there for them. Flights are there for them. They are having their own ships as well. Means they are having multimodal. Now, goods should go from India to London. In London also, they are having agents. To that agent, they wanted to pay they wanted to pay some agency commission. You can pay commission to agents abroad, but with CG approval. Next one, TV channels are hiring satellites from outside India. For them, they wanted to pay charges. Yes, any hiring charges on transponder. Transponder means satellite path. Next, prize money or sponsorship payment. Okay, any prize money you wanted to pay outside India, sponsorship you wanted to give, you have to take CG permission, but that is not required if payment is made by international national sports body. No approval required. Okay, and payments by person other than above. Other than above means other than those, if you want to pay, not exceeding $1 lakh, no CG approval. Exceeding $1 lakh, CG approval is required. Advertisement expenditure. Okay, advertisement expenditure given in foreign print media by CG or PSU exceeding 10,000 other than for tourism, international bidding and foreign investment. If all these 5 conditions are satisfied, then advertisement expenditure requires CG approval. Next one, very, very important one, RBA approval cases. Okay, RBA approval cases, again, 2 parts are there. Individuals, other than individuals. Okay, for individuals, examples these are. Okay, only example list: business travel, private visit to any country other than Nepal, Bhutan, because other Nepal and Bhutan ke drawl is prohibited already. Gift to donation, going abroad for employment, immigration, all these medical related things, any kind. Okay, exceeding $250,000. This you have to remember. There is one concept called as a liberalized remittance scheme. Do you know what this says? See, any transaction requiring approval of RBI means either a capital account or current account transaction. Any transaction that requiring RBI approval made by individual who is a PRI not exceeding $250,000 2,50,000 per annum, including his family members. Up to this level, RBI permission not required. For example, debt instruments are involved. Any transaction other than debt, non-debt instrument, general transactions, RBI permission required. Capital account, current account also, these transactions require RBI approval. Both together aggregate in one financial year. If it does not exceed 2,50,000 by a PRI, being an individual, then no permission is required. That is liberalized remittance scheme. Okay. So now question. So sir, in all these cases, aggregate in one financial year up to 2,50,000, no permission. Exceeding 2,50,000, permission of RBI required. Ada sir, yes, correct. But there are some exceptions to this. Listen carefully. Exception I wanted to discuss. See here. In case of immigration, in that list, immigration is also there. Okay, immigration. In case of immigration, medical treatment or studies abroad. 3 cases. Immigration expenses in connection with medical treatment, studies abroad. Individual may avail exchange facility for an amount in excess of limit prescribed in LRS. Okay, provided if it is required by country of immigration, medical institute offering treatment or university, means that country outside India accepted for more than 2,50,000, then you can draw more than 2,50,000 also. Medical institute offering treatment, there is a medical institute or a medical hospital outside India. That hospital is saying that they have given quotation for this operation, it will cost $3 lakh. Now up to $3 lakh you can use LRS. Studies also like that. So government kind hearted. What they wanted to tell, immigration means what? Permanently you are shifting from India to outside India. Then you can take how much amount that country allows. That much amount you can take. Next, medical and studies. No limit of 2,50,000. Even if it is a $10 lakh given by university, 10 lakh LRSA. Okay. Next. Further that, a person who is a resident but not permanently resident in India, means once in a while he became a resident, he is a citizen of a foreign state other than Pakistan, or a citizen of India who is in deputation to a branch, etc. Okay, may make remittance up to his net salary. Next. RFC account, if you do not, limits does not apply. This is just a normal case. I am putting it screen like this. Pause and read. These are all important note points from this exam question also can come. General discussion. No great analysis is required. Just you need to read once before exam. Pause it and see. This also. Pause it and see these points. Okay. Next, let me come back to the same story. In case of other than individual. Okay. For example, contributions I made. Creation of chairs in reputed institute. I am making contribution. Simply to tell, I am making donation. Individual making donation comes under this category. But we are seeing other than individual. Okay. For example, I am a company. I wanted to give a donation. For what you are giving, purpose should be creation of chairs in reputed education institute. Chairs means medical seat, engineering seat, like that. Okay. For creation of seat outside India, if you are donating, that will be coming under. Next, contribution to any fund. For example, there is a company. For that company, they are doing scientific research. I wanted to donate to that fund. Yes, you can. They are constructing a building. For that, I wanted to give. No, that is investment fund. Next, donation to technical institution in the same field. Means what? I am in medical. There is another company in USA that is also in medical. They are doing a lot of hard work and research. I wanted to give them. Give it. No problem. Quantum, how much you can give, up to what extent RBI permission not required? 1% of foreign exchange earnings during 3 years. 3 years data they will give in the question. Foreign exchange earnings they will give. Total them into 1%, one value, or $50 lakh, whichever is less. Okay. Okay. Next, agents commission. There is a company in India. Okay. There is a company in India. That company is in real estate. They wanted to sell plots in Hyderabad city to a person residing in USA. USA, one agent is there. He is helping to log this transaction. He made it. That person bought, we sold. Agent is doing all the documentation work. For that agent, I want to pay commission on the sale proceeds. So to what extent no permission is required? Up to $25,000 or 5% of inward remittance, means sale proceeds, whichever is higher. Okay. Next, consultancy. Infrastructure consultancy na up to 1 crore no permission required. $1 crore. Here software consultancy up to $10 lakh if you pay, no permission required. Beyond that, permission of RBI is required. No permission is required if the transaction is made through RFC account of the remitter. That's it. These are the main concepts, and with this we completed our first other law called as Fema. Now it's your work to open the question bank and do all the questions in Fema. Practice all the questions. Each question 2 minutes. 20 questions are there na. 40 minutes you have to complete entire Fema. It will give you 14 marks in exam. That you should never forget. Okay, in 1.5 hours, which chapter in Companies Act will give you 14 marks? Fema will give you. So show some respect on the chapter, complete it. Okay, well, so but one point, there will be one question in study material where they will ask like this: residential status law. If you are going for studies abroad, study is not employment, it's not business, it's not vocation, it's not in uncertain period. I'm going for education for 3 years. But exam law, what you have to write? RBI circular is there. 2003 year RBI released a circular. Do you know what is the saramsam of that circular? So what is the main idea of that circular? That circular says students leaving India for education outside India, they are not doing education. They are doing gas station work. They are doing work at supermarkets, etc. Means they are doing employment sideways. Therefore, going for education outside India is treated as if it's like an employment. Okay, well, this you remember. Do all the question bank questions, okay, such that you will get 14 on 14 in the examination. Okay, all the very best. Coming up with LLP as well like this.